If you can master top-down analysis like the way I'm going to share with you in this video today, you will have the keys to become profitable. Literally all you need is one candle and 3 time frames. What I'm about to share with you is so simple, it hurts my head. In today's video, I'm gonna break down step by step the 3 trades that I took following this one candle. Every single one of these trades was taken live with my inner circle students, and I'm gonna prove it to you.
And then my take profit level was 1 to 5, and I think I ended up getting taken out at like 4.8.
I also made $25,000 on this day. Let's just jump straight into it. You can see here 3 trades that have been taken. 1 winner, 1 loser, and another winner. And I'm gonna break down every single one of those trades, but most importantly, I'm gonna break down the top-down approach that I took to take these trades in the first place. And that all starts with this thing right here. So let's go back to before these trades are taken. The key here, and the key to all of this, is this candle right here. This candle is the current daily candle in motion. And when price moves, this candle moves with it. And so my job, right, as a top-down analyst, if you want to be a successful top-down analyst, you just need to understand the character of this one candle. And the way you first do that is basically understanding what the last few of those daily candles has actually produced. So I'm going to go to the daily time frame here. I'm actually going to go back before this daily candle has printed. Now, what do you see, right? And yes, it is literally this simple. We have 1, 2, 3, 4 bearish days on euro dollar, right? We have 4 days of bearish price action. Now, the likelihood is that we are going to get a bearish continuation the next day. And the thing that I have in mind here is essentially just a continuation below this previous day's low and a continuation lower. If you look to the left, you just need to identify an area of interest. You don't need to mark out all of these different structure types, go from the daily to the 4 hour to the 1 hour to the 15 minute. No, you just need the daily time frame to give you a read on price. All you need to understand is the probability of the daily candle printing lower or higher. And then you need to build trade ideas based off of that. That's what I'm going to show you. So for me, what I can clearly see here is we have this fair value gap right here, inverted fair value gap, that the daily time frame is now trading into. But we've filled some of that, but we still have more of this fair value gap to be filled. So my bias, even from the beginning of the week, is that we're going to trade and probably fill this fair value gap. So I have an idea of where price will want to react from. I have the context of the last 4 days on Eurodollar have been bearish. All I'm expecting is a bearish continuation, right? It's that simple. From there, once you have that, just drop down to the 15-minute time frame. And so here we are now in the 15-minute time frame, right? And the new day is about to open at 5. So now the new daily candle gets printed. And you can see that here. And what happens is this daily candle prints bearish. And it does give that continuation, right? The daily candle does print bearish, but I'm starting my trading day in London session and finishing my trading day in New York session. So here we have London session has opened, right? This 2 a.m. candle right here, London session has opened. Now notice, this is all the daily bias is. Notice that this is a very aggressive green bullish candle. I personally, if my bias for the day is lower prices, I want to sell when the daily candle is bullish. If my bias for the day is higher prices, or in that session is higher prices, I want to buy when that daily candle is bearish, because I understand also the concept of mean reversions. You see, the higher that price becomes and the higher to the high of day that price becomes, or the closer to the low of day price becomes, the higher probability that price is going to snap back and have a mean reversion. That's what the other 2 trades are based off. But this first trade is based off a daily bearish trend continuation. The 15-minute time frame is bearish and the daily is bearish, and I'm expecting this area of price in here to get filled. I have Asia low and the current low of day. All I need to care about is that this day is going to trade lower than previous day, which it already has, and we are going to revisit the low of the current day, because we're still bearish. Now, I could be wrong and price could continue trading higher, but I would not sure if that were the case. All I need to do is when London session opens up, I need to make sure that the internal range liquidity has been taken, which in this instance it has. And then I need to wait for an order flow shift, which is the 1-minute time frame. So this is daily time frame, 15-minute time frame, 1-minute time frame. Now notice that as price is coming up to this area, as this daily candle is bullish, the 1-minute time frame is bullish. So what we need to see is a reversal Right now, the daily candle is the daily price and the 1 minute price is moving bullish. I'm waiting to see it move bearish. When it moves bearish, that is when I will look to enter and I will look to sell this market short. So until then, it's just a waiting game. And you can see I literally live called this ahead of time with my live students. Now, a quick announcement, if you want to be one of those traders who is getting this information before it even happens, then down below in the description of this video, I'll leave a link for you to take a look at that. Let's dive straight back in. So as we can see, we are bullish on the 1 minute time frame. Eventually, the 1 minute time frame is continuing, which is kind of normal, right? The M1 is bullish. So at this point, I'm not interested in sells. I'm interested in sells when we trade below this level, if we get that trade below that level. And then we do, right? Sellers come into the market, we overpower. This now, for me, is most likely going to be the high of day. So that's what I'm trying to catch essentially as well, is I want to try to catch the high of day. I want to short the high of day. Now, sometimes that can lead to you getting in a little bit early, which is why this is very important. You can't just try to short the market. You need to wait for the lower time frame confirmations. This is why the 1 minute time frame is important. I believe and suspect that this right here is going to be the highest point of this day. And if I just get that correct, maybe I get a break even. Maybe I get a winner. But if I just correct on this being the high of day, I cannot lose money on this trade. So I go now to the 5 minute time frame. And I'm just waiting for that's what we have. I'm just waiting for a quick snapback into this bullish 5 minute candle, right? Quick snapback into the bullish 5 minute candle. And then you just want to target the current low of day. So that's 5.21 risk to reward. So if, for example, I'm trading $400,000, which on this day I was, then I am risking $4,000, 1%. But I'm going to gain $20,000 if this trade comes through. And that's what this trade netted me. You can see price tags in immediately, trades away, tags back in, and then literally begins selling off, eventually hitting all of those lows. And myself and countless of my inner circle students took this exact trade. Then comes the New York session. I could be lazy and just say, you know what, that's my day done, $20,000 day, but that's not how this game works. I want to be the best trader, not just make money. I want to execute my edge consistently, and I still have an edge to play because now what is in play is still based off the same daily bias. Now that we've had the main move, right, look at this daily candle. Look how aggressively bearish this daily candle is. Remember what I told you just a moment ago. When this daily candle is at the low, the snap back becomes higher probability. So a lot of the times when you have a daily candle, if we go to the daily candle, if we go to the daily time frame right now, and we look at all of these daily candles that we have recently seen, what you'll notice is one thing is common in all of them. You'll notice that at some point in time, right, we have our open, high, low, close. Now, do you notice that 99% of the time, the low of the daily candle is lower than the close of the daily candle? Very, very important detail. The low is oftentimes lower than the close. So what that tells me, even in a bearish market, what that tells me is at some point in time, we are going to find the low of day, and then we're going to have a bounce from that level. And this candle, maybe it finishes bearish, and maybe tomorrow is more bearish price action, but I know at some point in time, the low of day is going to get placed. And again, I want to catch that low of day. And people oftentimes tell you, don't try to catch the lows, don't try to catch the highs. That's just because they don't know what they're doing. That's just the truth of it. When you understand the daily model, you can do that. And it's okay if you're also sometimes wrong. And this is why confirmation becomes very important. So you can notice, right? Look at all of these daily candles. A lot of the times you have a significant difference between the low and the close, right? Between the low here and the close. Now, this little movement from this low up to the here may not seem like a lot, but if you're an intraday trader like me, that's a 22.4 pip move. If my stop loss is on average, let's say 5-6 pips, well, that's a 3-4, sometimes 5 times the size of my stop loss. So I can catch a very quick, sharp 1-3, 1-4, 1-5 risk reward on the bounce back. And that's exactly what this idea is about. It's about that in a very bearish day, right? When you're in the market like this, A very bearish day. At some point in time, price is probably going to close up here. And at some point in time, price is going to run this aggressive low. And then eventually sellers are going to get exhausted and price is going to have a bounce. And I want to long this bounce up into the close of that day. That is the higher time frame, daily bias, top-down analysis approach to this system. And it literally really is that simple. And so I come on live session with my members. And now at this moment in time, we are just waiting for a sign of reversal. And for me, the lower price comes down into this level, the better it becomes. Because the more price goes, price has an average daily range move. Although sometimes it breaks that average, absolutely. A lot of the times it has a constraint to the maximum amount of pips that it's usually going to trade. And the more it becomes overextended in that one direction, well, then we're expecting to have a bounce. The lower price comes, the probability starts increasing that that bounce is about to arise. And that's literally what we're playing off. And so you can see here, 5-minute time frame, we're just waiting for a bounce. And that first bounce happens here. And this is our first trade taken. In fact, we don't actually get into the market here because this isn't a big enough shift. We get into the market when this high gets taken. So you can see, right, we've been melting off, melting down, and now we're starting to get a little bit of a reversal. And so we wait. Price breaks this high. That's my sign now that maybe this here is the low of the day. Right? That is my bias. The same that I call the high of the day. Now I'm looking at the low of the day. And so again, 5-minute time frame, which is my usual entry time frame. I'm just looking at this inverse fair value gap. So down here, we have this inverse fair value gap, right? I'm putting my longs in here. My stop loss is going below this low. This is quite a larger stop loss than normal, generally speaking. You can notice like this is a 5.7. Usually it's like a 5, 6, 7, 4 pip stop loss. 10.2 is a little bit abnormal, but it's still fine because 1 to 3 risk to reward in this scenario, which is my fixed level, is essentially just a trend retracement. You can see, right, we have essentially a trend continuation, a retracement. Trend continuation, retracement. Trend continuation, retracement. That's all it is. It happens time and time again, day after day. And so again, I'm just waiting for this. And that's the trade that we're waiting for. And eventually price tags us in and then it tags us out, right? Just like this. Then what happens on the lower time frame is notice that the confirmation for me to get into this trade is that this 2-candle 1-minute time frame pullback gets broken. That's my criteria. All of my strategies have mechanical step-by-step rules. They're not random, they're not discretionary, they are rule-based. And I have years of data testing those specific rules to prove that they are actually profitable. So when I make decisions based on what I know works. So what happens here is we run this low. Okay, no problem. Maybe that's not the low of day. Maybe we go for one more sweep, right? That's again, a lot of the times what price likes to do. If we look at the 15-minute time frame, and we also look at how this 15-minute candle closed, it fails to close below this 15-minute candle down here. We fail to break and close below. We create a swing down here. That for me is even a higher sign that we're going to get a reversal. So now on the 1-minute time frame, I'm looking at price and we can see here we have a very small but still valid 1 candle, 2 bullish candles in a pullback that has now been broken and closed above. And what do we have down here? Right, we have number 1, the fair value gap that sits right here. We have the sell to buy region as well that sits right here, right? On the 3-minute time frame, you can see that we have this fair value gap. So we can just literally place our order, entry on here, stop loss below the low. And again, you can see this is a 4.2 pip stop loss. This is a little bit more of an average size stop loss. You can see this is exact trade that we're placing yesterday on live with our members. And then I'm just looking at a simple 1 to 3. I'm not asking for much. It's very easy for price to have just a bounce from here. Even if we then go lower, right? I'm just assuming that this is probably going to be the low of the day. That's all I'm trying to find. And again, many people will tell you, don't try to find the low of the day, or don't try to catch a falling knife, or just trade the trend. I make hundreds of thousands of dollars not taking that advice. So, I mean, please continue. Don't do this, right? More for me. But I literally make a living catching highs and lows. That's what my strategy is. And so yeah, that is the trade idea. And then you can see price comes back, really nice tag, really nice reversal. And literally we get tagged in around 10 a.m. and we get tagged out at around 10:51. Less than an hour. That's a 1 to 3 risk reward. That's $12,000. I'm risking $4,000 to gain $12,000. And that was my day. 3 trades taken, $25,000 in profit. If you want to do this with me every single day live, then don't forget to check the link in that description.